Yeah, you know what? I guess that's the first time I've heard that expression, get on zero. I always thought it was a misnomer. I know what get off zero means, and that's how I like to manage risk with respect to Bitcoin. And I've made this fairly public. I firstly am not 100% exposed to Bitcoin, and shame on me, but that's never how I've managed risk. And then secondly, and most importantly, you know, in this great Bitcoin community, I've come to meet some people that can lay things out quite succinctly. And I've always been talking about the math of the DEBT spiral, the reality of the U.S. situation, which is reflected in most other developed G7 countries. And I have a good friend, James Lavish, who I actually suggested, I'm not going to steal any of this thunder, I said, because the mathematics is as simply as this. The USA right now at historic low interest rates is barely collecting enough US tax revenues to cover its interest expense 100%, which means if interest rates rise, which they are likely to rise since the Fed is pushing short-term interest rates higher, the average funding rate for the USA is going to increase, and that will lead to higher interest expense, which will in turn lead to the organic growth of the US debt outstanding just because of interest. The USA collects $4 and change trillion annually in tax revenues. And mind you, that has been augmented lately because of nice capital gains increases in stocks and assets. They collect $4 trillion, and they have what's called they have their primary, they have a fixed cost base that includes entitlements and military spending. And the combination of entitlements and military spending is in the area of 3.6 trillion, which leaves the balance of the tax revenues to pay for the interest expense. Now, the USA has $30 trillion of outstanding debt, Joe. And right now, their average interest expense is about $400 billion annually, okay? But that's at historic lows. The average interest rate that they were paying, if you do 30 trillion divided by 400 billion, is around 1%. But that's likely to rise to 3%, right? Because the Fed funds rate is, U.S. 10-year rates are now, 10-year Treasury yield rates are now 3%. So it basically means that debt spiral is growing organically and can be quite severe if the Fed has to push rates significantly higher just because they're fighting inflation. It all leads to my opinion that quantitative easing, QE infinity, is in the offing. There's no other way to solve the debt spiral. And I want to throw this out. It's important because there's other people doing great research. So I mentioned James Lavish, Luke Groman, absolutely on the same page. What a lot of people fail to appreciate, Joe, and this, I spent my entire life trading credit, junk credit to be exact. If a corporation had the same financials as the USA, it would be rated triple C. Full stop. Full junk credit, triple C rated. That's pretty scary, isn't it? Because triple C rated corporations do not cover their interest expense or cover their interest expense anywhere between 1 and 1.5 times. That's the USA right there. And it's soon to be covering it less than 1 full turn. This is not a good situation. It's very scary. The rating agencies give the benefit of the doubt and say, okay, well, these guys do have the ability to tax and they do have the ability to print money. But nonetheless, it's my opinion that the credit risk of sovereign nations is severely under, as we know, in my opinion, is Bitcoin. Bitcoin can be thought of as an insurance on misunderstood, and we need a solution. The solution is sovereign debt spirals. So again, got to be careful. How do you define pivot? I think I know how Luke is defining it, and it's aggressive. To say that the Fed will pivot by September, I believe is aggressive. That being said, if we define pivot as a change of the inflation target, if we define pivot as saying, okay, we're not going to get to 4.5%, we'll probably get to 3.5%, maybe 4%. Yeah, I think we're in the process of that. I think if you dissect the some of the language from some of the governors, it's pointing to that. And there was a Chicago white paper that was introduced at Jackson Hole just recently, the Jackson Hole summit, and it basically said the Fed has a choice: accept inflation or global depression. Well, okay, so to be clear, I'm lucky to be in the fine state of Maine right now, so New England. But yes, I am Canadian. I believe it was let's call it a seminal event in the life of Canada, as well as the Bitcoin adoption process. Now, if you had asked me, and I played this game, I didn't play this game, but I've stated it in other podcasts. If you had asked me 3 years ago, what is the chance that the Canadian government would freeze bank accounts, I would have said, yeah, okay, it's not impossible. I would have said, okay, yeah, not zero, yeah, 20% over a 20-year period, but not high. And yet 3 years later, with 100% certainty, they froze bank accounts. And, you know, it became a little scary, because when you have your assets tied up, your net worth tied up in the Canadian financial institutions, and you're worried that they are going to freeze it, it sends up a flag. And while we saw some accounts get frozen, and now there have been repercussions and some mea culpas, but the truth is it happened. And yes, it did get some press. The Bitcoin angle got some press, but true to form, the Canadian press made it look like Bitcoin was the bad guy. Oh my gosh, Bitcoin is allowing these truckers to get funded. I'll tell you what, though, it probably got more press in the United States than it did in Canada, and rightly so. Because if it could happen in Canada, I don't want to predict it will happen in the US, but it certainly increases the odds that it could happen in the United States as well. Bitcoin is freedom money, and Bitcoin is freedom. I absolutely agree with that. Now, that being said, we are a community that is up against some established, deep-pocketed, and some would call nefarious counterparts across the world. I believe in the long run, Bitcoin will win, but I also have to be cognizant of the fact that there are people who will do everything that they can to stifle the progress of Bitcoin, including probably the Prime Minister of Canada. My good friend Jeff Booth, who I already mentioned, he happened to be at the Oslo Freedom Forum, and there was a young lady from the Ukraine that came up to him and thanked him for being involved in the trucker convoy, because she said it warned them, essentially, or allowed them to start funding some war relief efforts through a Tallycoin platform rather than through GoFundMe. And that's, she said, we were able to get life-saving resources to the citizens without friction, without being blocked by the various funding platforms, etc. And you know what? She actually said, I believe it saved lives. Yeah, you know what? I guess that's the first time I've heard that expression, get on zero. I always thought it was a misnomer. I know what get off zero means, and that's how I like to manage risk with respect to Bitcoin. And I've made this fairly public. I firstly am not 100% exposed to Bitcoin, and shame on me, but that's never how I've managed risk. And then secondly, and most importantly, with the asymmetry of the return distribution of Bitcoin, meaning the asymmetric upside, you actually don't have to be all in order to participate in a generational wealth opportunity. And so I have never actually advocated being 100% in Bitcoin. That being said, I understand the conviction. But You know what? I own a basket of hard assets that includes Bitcoin as my highest weighting of the hard asset category. But I also own other hard assets, and that's just the way I've always managed risk. And gold, for example, is not Bitcoin's enemy. In fact, gold and Bitcoin are so closely joined at the hip in terms of why they exist to hedge against central bank shenanigans. I think that it's natural that gold bugs would gravitate to Bitcoin. We need to focus on the bond guys, okay? The credit guys, the people that are funding the fiat Ponzi. And that is a $400 trillion pool of assets that should allocate a portion of that pool to Bitcoin. Again, the world, there are no asset managers in the world that are 100% exposed to any one asset class. There are individuals that are, and that's fine. That's their prerogative. But the big money will never be 100% exposed to any asset. I've always managed risk on that basis. I own equities. The only thing I own zero of is bonds. And then when the boys and ladies say get on zero, meaning get on zero cash 100% to Bitcoin, I think you're going a little too far to the tail risk side because, yeah, markets are volatile. We are on the head of a pin, and the Wall Street algos are still trading Bitcoin as a risk asset, okay? They haven't made the, there haven't been enough senior people in the analysis team to say, hey, you know what? Bitcoin isn't a risk asset. It's actually insurance. It's the opposite of a risk asset. But until that narrative catches on, yeah, you have to play it like you see it. Don't trade the book you want. Trade the book you have. And right now, Bitcoin is being traded as a risk asset. Full stop. I think that'll change over time. But until it does, I need to keep powder dry, allocated to other assets. If you want to call out an asset, my choice is calling out bonds. But maybe we'll take that expression, get on zero bonds, okay? That should be for a lot of the population of the world. And you'll say, well, we always need to hold some bonds. I'll say, okay, well, at least get out of some of your bonds and allocate that portion to Bitcoin because the 60-40 portfolio is dead. 60% equities, 40% bonds. That 40% that's in bonds is mathematically programmed to debase, as well as bonds, as you know, perform very poorly in rising interest rate environments. So there's not a lot there for the bond guys, in my opinion. Now you'll get guys like Raoul Pal who are out there saying you gotta trade bonds. Well, so far, unfortunately, he's been wrong, and he said a mea culpa. But please understand that bonds, the 10-year return on a bond over the next 10 years on the U.S. Treasury will be 3%. That's the math. But there are a lot of influential guys that say it's Bitcoin or nothing. And, well, I like their conviction, but the world risk is just not managed that way. It is just not, and it never will be managed that way at any large money institution.